Hello, everyone, and good day. And today, I hope that you are all ready for another learning experience. So, the topic that we are going to learn today is all about stock valuation. By the way, my name is Charliemagne Sibonga, and I will be your reporter for today. The topics that we will discuss is first, we're going to discuss an overview of the stock market, and then we're going to learn about stock valuation. So, what are we waiting for? Let us begin this learning experience. What is a stock market? But before we learn the definition of a stock market, what is a stock? So, a stock is a form of security that indicates that the holder has proportionate ownership in the issuing corporation. And of course, the market, it is a place where buyers and sellers can meet to facilitate the exchange or transaction of goods and services. So with those following definitions, we can um, identify that a stock market is the aggregation of buyers and sellers of stocks which represent ownership claims on businesses. So ang stock market daw, ito daw yung place or aggregation of buyers and sellers in which they trade, issue, or sell stocks, and in which the investors will gain proportionate ownership in the issuing corporation. So, in order for us to truly understand how a stock market function, I will give you an illustration. Now, let us assume that the figure is a stock market. Now, what does a stock market issue or sell? So, a stock market sells equity securities. It could either be a common stock or a preferred stock. Now, what is the difference between the two? So, the difference is the priority of payment and of course, the return on the investment. Kasi sa preferred stock, fixed na yung return on investment niya. While sa common stock, it depends upon the earnings of the issuing company. So, both equity securities has its advantages and disadvantages. For example, sa preferred stock, since fixed na yung return on investment niya, so kahit pa the company is not doing well, still, the advantage of a preferred stock, fixed pa rin yung i-return sa'yo. But the disadvantage is, if the company is flourishing or thriving in the industry, then kahit pa milyon-milyon yung ma-earn ng company, still, fixed pa rin yung mai-return sa'yo. So, sayang yung possible na earnings na makukuha mo. While sa common stock, though the return on investment is unsure, pero if the issuing company is thriving in the industry, then malaki yung makukuha mong return on investment. Now, why do investors invest in equity securities? It is because they will get dividends. So, dividends is the return on the investment. Now, that is how a stock market operates or functions. Now, let us discuss the important functions of a stock market. So, sa stock market, there is safety of transactions. Why? Because sa stock market, only the listed securities are traded, and stock exchange authorities include the company names in the trade list only after verifying the soundness of the company. So, dito sa stock market, only those who are qualified and the stock exchange authorities set standards and qualifications in order for a company to be listed in a stock market. Kaya there is safety of the investment and safety of transactions sa stock market. Next is a stock market serves as economic barometer. By the way, what is a barometer? So in science, a barometer is a tool used to measure the atmospheric pressure. So dito sa stock market, so stock exchanges is a reliable barometer to measure the economic conditions of a country. Why? Because the The increase or decrease in price of shares indicates the recession and the progress of the economy. Next is pricing of securities. So dito, stock market helps to value the securities on the basis of demand and supply factors. So when we say supply and demand, of course, yung mga thriving companies or profitable companies, since malaki yung demand, mas mataas yung price niya. So there is still a market equilibrium dito sa stock markets. Next is, a stock market promotes the habits of saving and investment. So the stock market offers attractive opportunities of investment in various securities. So dito sa stock market, it will entice individuals to invest their money because sino ba namang hindi maaakit na nag-invest ka lang ng pera mo, wala kang ginawa, nag-invest ka lang, pero may makukuha ka in return. So this will promote the habits of savings and investment. So this is actually one of the benefits of having a stock market because it encourages individuals to utilize their money wisely or to utilize capital wisely by saving and investing. Next is, stock markets offers liquidity because the presence of a stock exchange market gives assurance to investors that their investment can be converted into cash whenever they want. So if they need money, so they can convert their investment into cash. The next function of a stock market is that it contributes to economic growth. Why? Because the process of disinvestment and reinvestment helps to invest in most productive investment proposal, and this leads to capital formation and economic growth. And lastly, so stock markets can better allocate your capital. So stock exchange facilitates allocation of investors' funds to profitable channels. So dito sa stock market, you can assure that the money or the capital that you have invested will give you dividends or will give return to your investment. So instead of investing your money into non-assured companies like nag-invest ka sa kapa, edi na-scam ka. So why not invest in something that is authorized and is secured? So your money or your capital will be secured and you will earn dividends. So mas better yon kaysa sa nag-invest ka sa wala. Now, let us discuss about stock market indicators. So, each indicator applies to and measures a different facet of the stock market. So, stock market indicators can be classified into three groups. First, we have those produced by stock exchanges based on all stocks traded on the exchanges. Next is those produced by organizations that subjectively select the stocks to be included in the indexes. So when we say indexes, these are actually stock market indicators, indexes or averages. So the most commonly quoted stock market indicator is the Dow Jones Industrial Average or the DJIA. So in the Philippines, we have the stock market indicator, which is the Philippine Stock Exchange Index. So that is our indicator in the Philippines. So number 3, those where stock selection is based on an objective measure such as the market capitalization of the company. So those are the 3 classifications of the market indicators, stock market indicators. Let us discuss the pricing efficiency of the stock market. So a price-efficient market is one in which security prices at all times fully reflect all available information that is relevant to their valuation. So we can say that a market is price-efficient daw if the security prices is fully reflected and available and all are available for valuation. So there are forms of efficiency. Specifically, there are three different forms of pricing efficiency. And these are weak form efficiency. Means that the price of the security reflects the past price and trading history of the security. Now, why is this a weak form of efficiency? It is because they utilize past prices and trading history in which they do not reflect the current price or the current situation in the market. So next is semi-strong form efficiency. Means that the price of the security fully reflects all public information. Semi-strong lang siya because we will learn later on. So the next form of efficiency is strong form efficiency. Now, it exists in a market where the price of a security reflects all information, whether it is publicly available or known only to insiders such as the firm's managers or directors. So, so if it reflects all public information, semi-strong lang siya. But a strong form efficiency reflects not just the publicly available information but also the insider information, such as information from the firm's managers or directors. So, mas efficient siya. So, now, moving on, let us now discuss the second topic that we will discuss, the stock valuation. So, stock valuation is an important tool that can help you make informed decisions about trading. It is a technique that determines the value of a company's stock by using standard formulas. It values the fair market value of a financial instrument at a particular time. So ito daw, stock valuation is an efficient tool for the investors, because of course as an investor, you will be interested in finding out what would be the fair market value of your investment in the future or in a particular time. So a stock valuation is indeed very useful. So stock valuation is usually divided into two groups. We have absolute valuation and relative valuation. Now, let us learn about the methods used under absolute valuation. So, sa absolute valuation, it is intended to find the intrinsic value of the financial instrument. This method only focuses on the fundamental strengths of the company as the dividends, cash flow, and the growth rate for a single company. So first we have the dividend discount model. This is one of the basic calculations of the absolute valuation model. It calculates the true value of the company by assessing its dividend payout to its shareholders. According to this method, the dividend is the representation of the actual cash flow of the company. It shows the true value of the company's share. So later, I will show you the formula for the dividend discount model. Next method for under the absolute valuation is the discount cash flow model. So the method uses the discounted future cash flow of the company to calculate its market value. The method is applicable for companies that pay a dividend or do not pay a dividend to their shareholders. Then lastly, comparable method. This method compares the stock price multiples to a set benchmark value. The rationale for this method is that the similar financial instruments carry the same market value. So, these are the formulas that I have mentioned. So, the first picture is the dividend discount model. So, P is represented as the stock price, D1 is represented as the value of the next year dividend, and R is the constant cost of equity capital, and G is the constant growth rate in perpetuity. So the next picture is the discounted cash flow model. So the DCF is the discounted cash flow. Then CF underscore 1 is the cash flow period, then R is the interest rate, then N is time in years before the future cash flow occurs. So now let's proceed to methods used under relative valuation. So relative valuation method uses ratio and other types of valuation methods to ascertain the value of the stock. The ratio is the most commonly used method as it is easy to calculate and is available at hand. The common ratios used are price per earning, earnings per share, growth rate, price earning to growth ratio, sum of perpetuities method, return on assets, enterprise value, market capitalization, enterprise value to sales ratio. These ratios help the traders and the investors to calculate the fair value of stock and make informed decisions when transacting in the stock market. Now, I know that most of you are familiar with these formulas because we have already tackled some of these formulas in our previous cost accounting subject. But I will show you the list of formulas for you to ponder upon. So these are the formulas for stock valuation under relative valuation. So I know that some of these formulas are familiar to you, but you can practice these formulas in certain problems for you to master. This is the end of my discussion. Thank you for listening, and I hope that you've learned a lot from this topic about stock valuation. So once again, thank you and God bless. Stay safe and we will see each other soon.